Hello, and welcome back to the Cornell Capital Group's Reflections on Investing. And I'd like to pick up with where I left off last time and use the basic equation of investing to help you understand the cryptocurrencies. And I'll be talking about Bitcoin in particular, and to explain how the basic equation helps you see the risks you may face if you're interested in the cryptocurrencies. So let me start by reviewing that basic equation. Remember what it said. It said the price in a rational market is what you pay to get an investment. And then what you get back are these cash flows. And I wrote them as C1 plus C2 plus C3 and so on indefinitely, as long as the cash flow stream goes on. And the value of that, to equate it to the price, you have to discount back at this discount rate, which I called K, 1 period for C1, 2 periods for C2, and 3 periods for C3, and so on. So now let's say we're talking about Bitcoin, and we want to apply this equation. Well, we have a problem. What is C1 for Bitcoin? It's 0. You don't get any cash if you own Bitcoin. What is C2? It's 0. What is C3? It's 0, and so forth. Well, in that case, this equation is going to collapse, and you're going to conclude that the value of Bitcoin is 0. Well, it clearly isn't. Why not? Well, the standard economic answer for that is something called the convenience yield. And what is a convenience yield? Well, think in terms of currency. If you have a $20 bill in your wallet and you want to buy a pizza, you can walk into a pizza place, order the pizza, take the $20 bill out, and use it to complete the transaction. That's very convenient. If you had gold and you had to get rid of the gold or bargain with the pizza place for a little bit of gold, that would clearly be ridiculously difficult. So you may be willing to pay for an asset like currency because of its convenience yield. And potentially, that's a reason you might want to buy Bitcoin. I'm going to come back to that in a moment. But there's another reason that you might. You might say, well, according to this theoretical equation, it doesn't have much value. But if I buy it today, I'm going to be able to sell it to someone else tomorrow at a higher price. Because let's look at what the price of Bitcoin has actually looked like over the last year or so. This is from January of 2020 here to basically the present. And you can see that during this time, particularly beginning in the fall of 2020, Bitcoin has just rocketed up. It's up about 750%. Now you think, why can't I get on the train? I'll buy it. When it goes up enough, I'll sell it. But the problem is you have to sell it to somebody else. And why are they buying it? It's not going to give them any cash flow either. They have to be buying it because they think it's going to go up and they can sell it to somebody else. Well, that other person has to sell it to somebody else, all the while paying higher and higher prices. And what tends to happen in these self-fulfilling expectation markets, eventually the price gets to the level where there's no longer a buyer who's willing to pay more. And at that point, people start wanting to get out. And what tends to happen is the price crashes back. And that is the huge risk of Bitcoin or any cryptocurrency. Well, you say, well, no, wait a minute. You forgot about your convenience yield. Well, let's talk about that. Right now, you can trade Bitcoin through Coinbase. And does that make holding Bitcoin convenient? Well, not compared to currency. On Coinbase, if you want to buy Bitcoin, you pay 0.5% in. And when you want to sell it, you pay 0.5% out. that is not the same as currency. And if you want to use it for a transaction, if you want to use Bitcoin to purchase that pizza, well, the commission tends to be about 2%, but there's a fixed charge. So for the pizza, you're going to pay about 10% in transaction costs. All of this doesn't make sense using Bitcoin as a substitute for currency in providing a convenience yield. So that takes us back to the real reason that people seem to be purchasing Bitcoin is the belief that this trend is going to continue. But ultimately, as I said, that trend relies on people willing to purchase it from you at ever higher prices. And at some point, that's likely to collapse. So in other words, if you're thinking of getting into a cryptocurrency, be aware of the risk of collapse and check very carefully how you might be able to buy it, sell it, or use it for a transaction. For all those reasons, it seems like buying Bitcoin at a price of $55,000 is a transaction that involves a lot of risk, questionable expected return, and not much convenient yield at the current time. Hope that helps you. Good talking to you. Until next time, this has been Reflections on Investing by the Cornell Capital Group.